BIS's monthly position in gold swaps and leases has collapsed this year since January. I mean, it probably pretends diminishment of the paper gold trade. And if the paper gold trade fades out, the price will rise substantially.
Please join us for our next live stream Sunday, November 13th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, November 13th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television SBTV. I'm your host, Patrick Vieira. Chris Powell from GATA joins us today. Chris is the Secretary, Treasurer, and Director from GATA, the Gold Antitrust Action Committee. And before that, he was the Managing Editor of the Journal Inquirer, a daily newspaper in Manchester, Connecticut from 1974 to 2018, when he retired from his management work while remaining the newspaper's political columnist. And we're delighted to have Chris Powell join us here once again today. It's time to saddle up and silver up for Chris Powell. Chris, welcome back to SBTV. How are you doing?
Oh, it's great to be with you again, Pat.
Glad to have you back again, Chris. Appreciate the time. Chris, I just want to touch on the recent FOMC meeting where Powell raised another 75 basis points and hinted at slowing the pace. What are your thoughts on the recent 75 basis point hike and how the Fed is handling inflation so far?
Well, my opinion on this stuff is probably a little unorthodox, Pat. I don't think that interest rates have much to do with inflation over here at all. I think it's almost entirely a matter of money creation and spending by the federal government. That's really why we have shortages. There's so much money chasing less and less production. Interest rates can affect that insofar as they will have a depressing effect on the economy. They'll, probably crash the housing market, which has been a big factor in inflation over here. But I don't think the interest rates are the underlying factor as much as the money creation, not only here in the United States, but around the world has been.
Yeah, it's a great point because let's say, Powell, he wants to start taking some money off of the table, but would that start to cause some liquidity issues throughout the world?
Oh, that's what everybody's worried about. All financial asset, values are floating on, this wave of cheap and free money. And if, as Alistair MacLeod often writes, the banks start reducing the credit they're extending and start to defend their loan books. Well, that will be cause a contraction in the economy, and many corporations that are a little too extended may start teetering, and that will cause banks to reduce even more credit. And who knows? We could have a crash pretty suddenly.
At that FOMC meeting, Jerome Powell is still talking about that mythical 2% inflation rate. You're laughing already. Hey, so am I. You think he's ever going to get there?
Well, I think it'd be a first. I don't know that we've ever had a year of deflation, since maybe the 30s, here in the United States. In any case, if you follow John Williams at Shadow Stats, you know that the real inflation rate is probably double the official rate of 9% here in the United States. At least the government acknowledges that food inflation is by itself is well above the official inflation rate. I'm not sure how you get that down, short of throwing half the country out of work, and I just don't see that that's politically possible. But who knows? The Fed is not an instrument of democratic government. It is something that really answers only to the banking system, and God knows what they will do to us. I hope when this crisis we're in is over, we examine central banking in a political sense as to who it serves and how it should be governed, because we don't give a thought to that now.
With this time of inflation, time of seeming like an overwhelming distrust in governments, distrust in banks. Why do you think we're by the numbers anyway? It looks like we're not seeing more people moving over into gold, moving over into silver to have that inflation hedge.
Well, for many years, the U.S. government and allied governments have done their damnedest to push gold not only out of the official financial system, but to remove it from the public consciousness. And they've done a pretty good job about that. Some people are very conspiratorial. They think the government really was behind cryptocurrencies like Bitcoin to distract the public from gold. Um, I just think the government has won the battle here. The government has removed gold and silver from the public consciousness generally. I mean, look for what we were just saying a while ago. We've had 7 down months in gold while inflation around the world is at record levels. Well, that's a great achievement. People tell our chairman Bill Murphy that, look, we know you're right. We know the government's rigging the market, but that's exactly why we've got to get out of the monetary metals markets, is because the government's never going to let us make any money there. Uh, and I'm afraid that despite all our efforts, the government has pretty much destroyed the monetary metals in the public mind. Now we know that physical demand for retail coin and bars has been very strong in recent months. So somebody in the ordinary investing world is buying, but most people most people don't really give gold a thought, and they've been better off for it so far. I can't argue with the COMEX price. The COMEX price has told the public what the public thinks of gold.
Yeah, that's a true point there with the spot price. Really so low compared to what people are trying to buy the physical at right now, where the premiums and the spot price are at really two different levels right now. But with the price, people seem to look at gold just purely as an investment. They look at the price, they see it, not moving. 7 down months, which we've never seen before in history, I believe. But are there other components that people need to understand about gold than just the price?
No, they need to understand that there's really, there's two kinds of gold. There's paper gold, and there's the gold you can buy at your local bullion dealer. And the premiums, as you know, are now higher than most people can ever remember. The COMEX price is just no gauge at all of the price of buying a gold coin or a silver coin. This is going to blow up sometime. I don't think they can maintain that dichotomy forever, but right now they're pulling it off.
Someone we know has been buying gold, or so they say, are central banks. Chris, I'd like to know your opinion on the reports that came out where central banks have bought up some roughly 400 tons of gold in the third quarter this year.
Well, I rely on Ronan Manley's interpretation of it, Pat, and he wrote the other day that there's really no authority for what the World Gold Council published the other day, that the data of asserting these great central bank purchases in the last quarter may be true, but the World Gold Council could not put any authority on it. They refer to a metals consultancy, which itself didn't have any hard data. Where did they get that information? Maybe they got it confidentially from some central banks. We know central banks have been announcing substantial purchases over the last year. Certainly for some time now, they've turned from net sellers to net buyers. So it's certainly very plausible that there's been a lot of central bank buying, but the excuse me, the amount that the World Gold Council claimed the other day, nobody can document that. But look, we know that gold is always concealed by the fog of government indirection. It is the secret knowledge of the financial universe. Governments don't want the public to know what's going on with gold generally and what they're doing particularly with gold. always refer people to the March 1999 Secret Staff Report of the International Monetary Fund, which is on GATA's internet site, and which shows that central banks obscure their gold reserve totals and don't separate their reserves from their gold swaps and leases because they consider this market sensitive information and that its disclosure would let the public see how central banks are intervening in the gold market in order to keep the price down. So we know gold is of supreme importance to central banks, and we know that central banks don't want us to know that.
If you're enjoying this interview with Chris Powell and I, please consider subscribing to our YouTube channel and letting the algos know you'd like to see more content like this. And if you'd like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com/SG. I mean, if I could ask here, perhaps for some new people, why the supreme interest in having gold for central banks?
Well, because it's the ultimate money. It's money without counterparty risk. It's money that the United States has a lot of trouble sanctioning if you keep it outside the United States. It has superior characteristics of money that central banks don't want you to know about.
I was looking through some statistics and I saw that the U.S. had sold off, it was just a small amount, 0.001 tons of gold. I haven't seen the U.S. selling gold before. I don't know if you came across this, but why is the U.S. selling? Why would the U.S. sell gold in your opinion?
It might be a coin related issue. Um, excuse me, Pat. It could be just a correction of accounts with other central banks. I don't know, but I do know that when you have a gold question for the Federal Reserve or for the U.S. Treasury Department, as GATA often has, as U.S. Representative Alex Mooney of the Republican of West Virginia sometimes has, you will not get an answer. Mooney, some months ago, asked the Treasury Secretary, Janet Yellen, why does the Treasury keep gold at the Federal Reserve Bank in New York? Unless that gold is in play there, there's no point. And Yellen's assistant would not answer him. They don't want us to know that the U.S. gold is in play, and it probably has been in play for a long time. Look, we have government documents showing that the Federal Open Market Committee was aware of gold swaps and leases. GATA has a letter from Fed Governor Kevin M. Warsh from some years ago when we were litigating with the Federal Reserve. Warsh wrote to our lawyers saying that among the documents the Fed was refusing to let GATA see were documents involving the Fed's gold swap arrangements with foreign banks. So, we know the U.S. gold is in play. And I suspect that, tiny little bit of sales you saw is the very least of it.
Chris, with you spoke about Representative Alex Mooney. When I look at the bills that he introduces, he oftentimes never even gets a co-sponsor for his bill. Why is Congress so afraid to step up and recognize sound money and join in the fight with Alex Mooney?
Well, because sound money is the end of empire, Pat. I mean, if you go to a gold-based system, I mean that means your money is limited. That's why governments hate gold because it puts enormous restraint on them. If they break out of a commodity money system, well, they can have infinite money, and that's what we do have. And now we're having inflation approaching the infinite scale. No government wants sound money. Sound money is limited government and restraint and individual responsibility. That's why government doesn't want sound money.
Dollar strength is a factor when we consider the movement of the gold price. However, I want to share this with you from the Business Insider back in 2013. The recent dynamics of the gold market have worked to ensure that lower prices caused in part by ETF outflows, boosted Asian demand to the extent sufficient to absorb the gold flowing from Western markets. Now, according to that report, here we are in 2022, and apparently we are seeing this again. So, Chris, what are your thoughts on this outflow of gold from west to east?
Well, I think the East understands that gold is superior money and is preparing for new financial arrangements around the world. Look, we know from the WikiLeaks cables that China is perfectly aware of the gold price suppression policy of the United States. There are a number of Chinese government news reports that were uh, seen by the U.S. Embassy in Beijing and translated into English and cabled back to the State Department in Washington, which are all about the U.S. government's gold price suppression scheme and how this scheme is operated in order to maintain the dominance of the dollar as the world reserve currency. China knows all about U.S. gold price suppression policy, and the U.S. government knows China knows all about it because we have the cables that went from the U.S. Embassy in Beijing to the State Department in Washington. Russia knows all about it too. We have the speech that the deputy director of the Bank of Russia, Oleg Mazayskov, gave to the summer meeting of the London Bullion Market Association at the Kaminsky Hotel in Moscow. I think it was 2005, might have been 2004. It's on our internet site, in which the only words of English the Russian central banker spoke were Gold Antitrust Action Committee. Now, to the best of our knowledge, GATA at that time had never had any contact with anybody in Russia. So we know that, as of, 15 or more years ago, the Russian central bank was watching GATA's work very closely and presumably was fully aware of U.S. Gold price suppression policy. Well, if the East, particularly Russia and China, know all about gold price suppression policy, it's perfectly natural that the governments there would want to acquire gold at a discount and build up their own financial position that way against the day when maybe the suppression scheme collapses. I'm sure that other central banks know all about this too, and that they're very likely all in it together through the Bank for International Settlements in Basel, Switzerland. Now, if you follow the BIS closely, as GATA does, and particularly as our consultant, Robert Lamborn, does, you find that the Bank for International Settlements engages in gold swaps and leases on behalf of its central bank members virtually every month, though those swaps and leases have declined sharply throughout this year. They're down by about 88, 89%. If you look very closely at the BIS, you'll find the PowerPoint presentation the BIS gave to a meeting of potential central bank members, I think back around 2008. Again, it's on our internet site, in which the BIS advertises as its services to its members secret intervention in the gold and currency markets. All the major central banks are members of the BIS. If the BIS is advertising gold and currency market interventions, all the major central bankers know what's going on here. They understand gold price suppression policy.
This is just great. So, on one hand, we have the central banks and government giving us fiat currencies, which they are debasing, and then on the other hand, we have gold, which they are suppressing. The true, sound, real money. Amazing. Hey, Chris, I'm also hearing stories about the physical gold that is moving from west to east, and in that we hear that the U.S. is selling their gold to China. Any truth to this?
Uh, Leases, I wouldn't be surprised at. Swaps, I wouldn't be surprised at. Sales, I think it's all a matter of where the gold is actually held, Pat. I mean, look, Russia just got sanctioned out of more than half of its international reserves. Um, I've often wondered if on Monday the Secretary of the Treasury takes the British ambassador to Fort Knox and invites him in and says, "Would you like to look at your gold?" And on Tuesday, he takes the French ambassador in and shows the French ambassador the same gold. And on Wednesday, he takes the German ambassador in and shows the German ambassador the same gold. The gold reserves are, to put it politely, oversubscribed. And someday, this oversubscription is going to be called, and there'll be a problem.
Overall, considering inflation, a potential Fed pivot, dollar strength that will ultimately reverse and correct, along with so many other factors, including a recession, potential stagflation, is this the time to be shedding gold or to be accumulating gold?
Well, I'm talking my own book, Pat. I've been doing this for, good Lord, since 1998 or so. And, I guess I haven't been doing it to get rich because I'm not rich yet. But I think something deeply wrong is being done to the world here. It's really an imperial scheme, and it's got to be defeated. And that's what we're working on here. I think it will be defeated. I think central banks themselves will change the system, and very well, even today they might be on the verge of changing the system. Um, there's a couple of U.S. economists, Paul Brodsky and Lee Quaintance, and a Scottish economist, Peter Miller, who've written papers in the last 20 years about what they saw as central bank long-term policy of devaluing debt and devaluing currencies and reliquefying central banks by gold price revaluation. There's some discussion of that in the open. In the Netherlands recently, Jan Nieuwenhuis at Gainesville Coins was disclosing that the other day. Gold is a mechanism central banks have used in the past to devalue their currencies, to devalue their debt, and reliquefy themselves. That's what Roosevelt did in the United States in 33 and 34. That's how governments can cover their debts, devaluing them and upwardly revaluing the gold. And all of a sudden, their dollars are devalued, but their gold is revalued upwards so much they come out ahead. We could be on the verge of that right now. It wouldn't surprise me.
Talking about central banks or government changing the system, the monetary system, I suppose. Is it going to be in our favor, or are we very naive to think that central banks and governments will do something in our favor and not theirs?
Oh no. Central banking works for banks. It works for governments. It works to keep the banking system profitable. It works to uh, maintain the money creation power for governments. Citizens, the public, we're mere incidentals in that scheme.
I've also read that we are offloading bullion using ETFs, and this is pushing gold prices down by some 8%. This happened in the third quarter. Chris, when do we see a bifurcation, perhaps, or will we see a bifurcation happen between physical metal and the spot price, which is basically a paper or futures price?
Well, I know certain people say we're already there. You can't buy a gold coin or a silver coin, 1 ounce coin for what the so-called spot and COMEX prices are. We have coin and bullion dealers saying that they've never seen the gap between the retail price and the COMEX price is as big as it is now. Maybe it's happening already.
Yeah, I'm one of those guys who do believe that when we look back in time, we look back at history, this might have been the point where we had that bifurcation between physical and paper. Uh, Chris, is there a chance that these low gold and silver prices are pushing investors away from the metals to a point where when they realize later on that they need them and look for them, it'll be hard to come by?
Oh, I certainly think so. And I think that has been the central bank scheme all along to push the nominal prices down as best they could in the paper market while reacquiring the gold that they sold during the 90s or that they leased and couldn't recover. Look, if central banks are buying, that's probably the future.
Chris, I would like to leave the viewers with something positive, something positive. Is there anything positive with the dollar, inflation, the economy, global governance, perhaps, or gold and silver? I mean, maybe you got a new puppy or something, but is there positive news, or is this a time where we really have to hunker down?
Yeah, there's positive news from the gold and silver standpoint. I mean, the our consultant Bob Lamborn on the BIS has noted that the BIS's monthly position in gold swaps and leases has collapsed this year since January. I mean, I just looked it up before we got together here. The BIS's lease and swap position is down 89% since January from what I write here. I guess about 501 tons to 57 tons. It stayed at that low level for 2 months in a row. Uh, People who are far more informed about this than I am think that this indicates a withdrawal by the major European banks from underwriting the gold leasing and swap market. That's probably connected with the new Basel III restrictions that require bullion banks to have full collateral for their gold trading. This is a major change that has happened in the last year. Now, obviously, it hasn't made me rich this year, but something major has changed this year, and it probably pretends a diminishment of the paper gold trade. And if the paper gold trade fades out and is replaced by more physical trading, the price will rise substantially.
Right. Would some part of it also have to do with, let's say, the de-dollarization, where countries are looking to get away from the dollar and perhaps looking to have gold as a neutral reserve asset for whatever new type of currency or money might be?
Yeah, well, there is a decline in the dollar's share of world reserves. It's much slower than the decline in the BAS gold swaps and leases. But yeah, there's a lot of resentment around the world about the U.S. government's weaponizing the dollar, and any country that values its sovereignty would want to respond to that. Would want to be less dependent on the dollar and more dependent on other currencies and other assets like gold. That's a much slower process, but it is happening.
Okay, so I guess you and I and whoever might be watching, let's get a little bit of sovereignty by heading out and getting some gold and, and some silver.
That's what gold advocates say. They say be your own central banker. Get get your own security stash of gold and silver over the long term. I think you'll be glad that you've got that. I mean, it may be too late for geezers like me, but for younger people, I think that's very good advice.
No, you're not a geezer, my friend. Chris Powell, before we wrap up, can you tell us a bit about GATA or maybe some projects you're working on or some future plans?
Oh, well, we've been a nonprofit tax-exempt organization in the United States since, I guess, our incorporation in 1999. We just try to expose the largely surreptitious intervention in the gold market by the United States and allied nations. We work for a free and transparent market in the monetary metals. We see this as a matter of achieving limited government and liberty around the world, and brotherhood among the nations. And uh, we haven't achieved all of those things yet, but we're doing what we can. I'm sure some other people could do a better job of it, but the World Gold Council is a creature of the banking system and the central banks and the mining industry generally, with certain exceptions, but generally the industry is much too afraid of its government and its banks to do anything. So the work is defaulted to us for the time being.
Chris, is there any way people can follow you or perhaps help your organization?
Oh, well, we've got an internet site, which really is the center of our work, Pat. It's gata.org. Uh, there's information there on how people can donate to us financially if they're so inclined. They can enroll there to subscribe to our daily newsletters, and they can reach me with any questions they might have about our documentation. I'm always glad to answer that.
Again, Chris, thank you for your time and hope to do this again soon.
Thank you very much, Pat.
That was Chris Powell sharing his views on the economy, a little bit of politics, and gold. To follow more of Chris' works and to support his organization, please visit www.gata.org. And if you like this video, please do consider subscribing to our YouTube channel, sharing it with your friends, and giving us a thumbs up. Audio-only versions of this interview can be found on iTunes and Spotify.